Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 4th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session. Number one, we obviously have the non-farm payroll coming out in about an hour ahead of this pre-market report, so that's going to be the big number that everyone's watching for. If you're looking at the ES right now from a numbers standpoint, for the most part, we've seen a significant rally off our last-ditch buy effort here off the 1921s. That led to a nice squeeze up, and since then we've held on these highs. We've had higher highs and higher lows day over day right now, and that continues to play out right at this moment. The price is attempting to hold above the 1981 half, which has been a significant key level in the market over the last several months. Holding above that zone would imply a continuation to the upside, again toward the next upside target above, which is going to be the HVN at 2071 and the top of the key range at 2075. Failure to maintain acceptance above 1981s would likely imply a return to 1921 with a shot at rotating all the way back towards support between 1804 and 1814. So there's a lot that can happen here. This is definitely a key inflection point, but 1981 half has been very, very important. Maintaining acceptance above that zone short term would imply a continuation to the upside. And again, we got to watch to see how this thing plays out after the NFP report comes out. Looking at the intraday time frame, you can see here that price is holding above the weekly 25% expansion level. That's 1989s. We've had higher value relationships on the pivot range day over day. You can see already we've had buys come in off the pivot range and new highs. If price again can hold above these 81 halves, the implication would be for a continuation into the 50% expansion target on the day at 2009.75, which also coincides with the primary daily target at 2010 half. Beyond that, there's 2014 and 2018. So that's the upside targets. Failure to hold 81 half opens up a retest of 5-day value at 1976 with a shot at retesting the previous week's high at 1968. That's going to be very important for bulls to defend, as is the LVN just below it. Otherwise, failure to hold 65s in general opens up a path back toward 39 half. Let's take a look at crude oil. Here's crude oil in the daily time frame right now. You can see prices have significantly rallied off the recent lows, pushed up to the midpoint of the key range at 34.63. That's the midpoint of this key range that spans from 40 half down to 28.76. And what we've seen before is price attempt to hold above that level, then fail. And when it came back to retest it, that was the point where we said it's likely headed back toward the bottom of the range, and that's what happened here. Now that we've come back up to that level, you can see there's been a little bit of kind of a top-heavy type of feel to it, and price is just kind of sitting precisely on that 34.63 level. Any failure to get beyond the 35.25 key level would suggest at least another retest of composite VPOC at 33.44 with a shot to rotate to the bottom of composite value, which is 30.80. So that's going to be important here. Pushing beyond 35.25 has likely a key test at the major LVN at 37s, and that is a significant LVN that's likely to be rejected upon first test, so keep that in mind. So right now, if prices can't maintain acceptance above 35s, the top of value, the implication would be for a rotation back toward the bottom of value into 30.80. Let's take a look at the intraday time frame. Looking at the intraday, you can see how much price is coiled up. We still have our key range from the previous session, 33.56 to 35.14, the midpoint at 34.35. That key range came in handy the previous session as prices were unable to hold above the top of the range, which implied a move back toward the center and value, and that's what we got. So these levels are still going to be very, very in play for the upcoming session. So 34.35 is going to be important to watch, 35.14, and any failure to hold above 34.35 opens up a path back toward 33.56. Let's take a look at gold now. Gold has been trending higher. We've noticed that bulls continue to defend pullbacks within the trigger zone of the uptrending, stacked and sloped pivot-based EMAs. We've also seen price push beyond the top of the key range here, 1263.90. However, price did not close beyond that zone. Now we've seen another high beyond that area, and price is attempting to establish acceptance above that zone and also above the previous week's high price at 1254.30. Defending this zone and keeping it bid would imply a continuation higher, perhaps into the expansion targets. And so what we have here would be the weekly pivot boss targets into 1280 and 1293. Obviously, we also have the expansion targets on the key range basis at 1282 and 1300.1. Failure to hold above the previous week's high price here of 1254 would suggest a retest of composite VPOC at 1233. And 1233 continues to be defended right now for shots higher. Failure to hold that level would rotate price down into support at 1191 half. Let's take a look at the NQ. Here's the NQ in a daily time frame. This one's been trending higher. We had a big time squeeze here off the 4190s, and now price is holding above 4287. Very narrow range up here. What's important here is if you look at the weekly key levels here, for the most part, price is holding above the top of the previous week's range, which is 42.93. That's the area where we talked about bulls wanting to defend in the previous session, and that level made money. Now, failure to hold that level would rotate price back into 42.30, the previous week's close. But keeping above this level opens the path to 43.97 half, which is the 50% expansion level, and 44.90. What is that? 44.03. That is the secondary weekly target. So basically, we have up to this zone to reach. If prices can stay above 42.93, we likely shoot into this area. Failure to hold 93s pops this thing back to 42.30. So looking at that on an intraday basis, you can see here a very nice 2-day range that has developed. Previous week's close here at 42.93s, very, very solid support with key LVN here. Holding that level again opens the path to pushing through 43.50 and into 4400, where we have a confluence of targets above. Beyond that level, targets 44.49. Failure to hold above the previous week's high here opens up a clear move into 44.30, which is the previous week's close, with a shot at seeing a push even below that. So a clear range for us to trade from as we head into the non-farm payroll. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.